Get ready because the future of driving is here, and it's moving faster than ever. This is Electro Drive News, and we've got the electrifying updates that are rewriting the automotive playbook. From global market shifts to groundbreaking tech, if it's happening in the world of electric vehicles, we're on it, bringing you the need-to-know news as it breaks. Don't blink, because you might miss the next big thing. We're diving headfirst into a rapidly evolving landscape, and today's headlines are absolutely unmissable. Prepare for a high-octane download of everything crucial. First up, we're tracking a major international move that bypasses significant trade barriers. BYD is making waves, navigating complex tariff landscapes by leveraging its production capabilities in Thailand to ship a massive fleet of electric vehicles directly into the European market. This strategic maneuver highlights a bold approach to global expansion and could signal a new era of how electric mobility reaches new continents. Next, we're zooming in on the broader economic picture and what it means for global trade. BYD is not just selling cars, it's showcasing the sheer power and durability of China's export engine. With overseas sales more than doubling and ambitious targets set for international markets, this automotive giant is proving that innovation and competitive pricing are key to conquering new territories, even amidst rising protectionism. And finally, we're getting a peek into the financial forecasts and market sentiment surrounding this industry titan. As earnings loom, analysts are weighing in on BYD's performance, with early indicators pointing towards significant profit growth. We'll explore the expert takes and what this could mean for investors and the wider EV market. Make sure you're subscribed and the notification bell is on so you never miss a beat. Let's get into it. Tariffs beaten, EVs arrive. BYD is demonstrating remarkable agility in the global electric vehicle market, strategically circumventing potential trade restrictions by utilizing its manufacturing base in Thailand. The company has successfully shipped over 900 electric vehicles from its Thai plant, with Europe being the primary destination. This significant shipment bypasses the complexities of direct exports from China and addresses concerns that may have arisen from recent trade policy discussions, particularly those involving potential tariffs or import limitations. By establishing and scaling production in Thailand, BYD is not only diversifying its manufacturing footprint, but also positioning itself closer to key consumer markets in Southeast Asia and, in this instance, Europe. This move is particularly noteworthy given the competitive nature of the European EV market and the increasing regulatory scrutiny of vehicles manufactured outside the EU. The ability to export such a substantial number of vehicles suggests a robust supply chain and efficient logistics, underscoring BYD's commitment to its global expansion strategy. This proactive approach allows BYD to maintain its competitive edge and continue its rapid growth trajectory in international territories. The implications of this strategy extend beyond BYD, potentially setting a precedent for other automotive manufacturers looking to navigate international trade complexities and access new markets efficiently. It's a clear demonstration of strategic foresight in a rapidly evolving geopolitical and economic landscape, ensuring their cutting-edge electric vehicles reach eager European consumers without significant disruption. This strategic shipping operation has generated considerable buzz, with industry watchers praising BYD's innovative approach to global market access. This is a powerful display of strategic maneuvering in the face of global trade challenges. Next, we'll delve into BYD's role as a symbol of China's booming export economy and what that means for the future of international automotive trade. China's export engine roars ahead. BYD, the electric vehicle giant, is not just a company making cars. It's a powerful testament to the resurgence and resilience of China's export economy. The $136 billion company is on a remarkable trajectory, aiming to more than double its overseas car sales this year, a growth rate that significantly outpaces its domestic expansion. In the first half of the year, BYD sold approximately 464,000 vehicles outside of China, a figure that more than doubled compared to the same period last year. This impressive performance puts the company well on track to achieve its ambitious goal of selling 1 million cars abroad annually, a target that would see overseas sales constitute about a fifth of its total global sales. This global push is happening even as BYD experiences a slight dip in its domestic market share amidst an intense price war at home. Analysts are anticipating a substantial boost in BYD's first-half net profit, projecting a 55% increase when the company releases its interim earnings. BYD's success in markets across Europe, Latin America, and beyond is particularly significant when viewed against the backdrop of increasing protectionist measures and tariff impositions from various global powers. It's not an isolated phenomenon. China's total exports saw a healthy 7.2% year-on-year growth in July, marking the 16th consecutive month of expansion. Key sectors like motor vehicles, integrated circuits, ships, and LCD panels have all recorded double-digit volume gains in the first 7 months of the year. While some of this export surge can be attributed to companies rushing to beat potential tariffs, other underlying factors are at play. The weakening of the US dollar against the yuan has made Chinese exports more competitive, with the average cost of a vehicle exported from China to Europe falling significantly in recent months. Furthermore, BYD's vehicles are increasingly recognized for their superior features, advanced technology, and longer battery ranges compared to similarly priced competitors, a trend mirrored in the success of other Chinese brands in sectors like smartphones and laptops. However, the global trade landscape remains dynamic. With countries like Mexico considering duties on Chinese goods and Russia implementing measures that have drastically reduced Chinese vehicle imports, the path forward for Chinese exports, including BYD's, is likely to become more challenging. This sustained export growth is a clear indicator of China's manufacturing prowess and its increasing dominance in global markets, particularly in the burgeoning EV sector. As BYD continues its global ascent, its financial performance is under the microscope, with upcoming earnings reports set to reveal the full impact of its international strategy. Next, we'll explore the market's reaction and expert analysis as BYD's financial results are about to be released, and what it means for the company's valuation. Global momentum, contrarian value. BYD's remarkable global expansion is setting the stage for its upcoming earnings report, creating a compelling narrative for investors and market watchers alike. The electric vehicle giant has been consistently making headlines for its aggressive international strategy, a move that has seen its overseas sales surge and its market presence grow significantly beyond China. This global momentum is particularly noteworthy when viewed against the backdrop of intense competition and ongoing price wars within the domestic Chinese market. While BYD's market share at home has seen some fluctuations, its performance on the international stage has been nothing short of stellar. The company has successfully navigated complex global trade dynamics, including the imposition of tariffs and varying regulatory landscapes, by strategically leveraging its manufacturing capabilities and product competitiveness. Reports indicate that BYD is on track to more than double its overseas sales this year, with ambitious targets set for international markets, aiming for 1 million vehicles sold abroad annually. This growth is underpinned by a combination of factors, including the weakening of the yuan, which enhances the cost competitiveness of Chinese exports, and the increasing appeal of BYD's vehicles due to their advanced features, superior battery technology, and attractive pricing compared to global rivals. As the company prepares to release its first-half earnings, analysts are signaling strong performance, with expectations of a significant increase in net profit. This positive outlook suggests that BYD's global strategy is not only expanding its reach, but also proving to be a lucrative endeavor. The market's reaction to these developments is keenly observed, with many viewing BYD as a contrarian opportunity. Despite the broader market volatility and the challenges posed by rising protectionism in some regions, BYD's consistent growth and strategic foresight position it as a potentially attractive investment. The company's ability to adapt and thrive in diverse international markets, while simultaneously innovating in the EV space, underscores its robust business model. This sustained performance and strategic expansion are likely to be key themes in the upcoming earnings call, providing valuable insights into the company's future prospects and its impact on the global automotive industry. The market is keenly anticipating BYD's financial disclosures, which are expected to reflect its significant global expansion and competitive strength. As BYD continues to impress with its global reach and financial projections, the competitive landscape is also shifting dramatically. Next, we'll turn our attention to how BYD's success is impacting its rivals, specifically looking at how Tesla is faring in the European market amidst this intensifying competition. Tesla faces European headwinds as BYD surges. In a dramatic shift within the global electric vehicle market, Tesla is reportedly experiencing a significant downturn in sales across Europe, a situation exacerbated by the relentless rise of its Chinese competitor, BYD. This stark contrast highlights the intensifying competition and changing consumer preferences that are reshaping the EV landscape. While Tesla has long been the dominant force in many international markets, including Europe, recent reports and analyses from fast money traders suggest a sharp decline in its sales performance on the continent. This downturn comes at a time when BYD is not only expanding its global footprint, but is also making significant inroads into the European market, challenging established players with its competitive pricing and feature-rich electric vehicles. BYD's strategy of manufacturing in Thailand and shipping directly to Europe, as previously reported, allows it to bypass potential tariff issues and offer vehicles that are highly attractive to European consumers. This move, coupled with BYD's aggressive expansion and product innovation, is creating significant pressure on Tesla's market share in key European countries. The fast money traders are pointing to a confluence of factors contributing to Tesla's struggles, including increased competition from BYD and other Chinese manufacturers, as well as potential shifts in consumer demand and regulatory environments within Europe. While Tesla's brand remains strong and its technology cutting edge, the sheer volume and aggressive market penetration by BYD are undeniable. This competitive dynamic is not just about individual company performance. It reflects a broader trend of Chinese automakers rapidly gaining prominence on the global stage. The implications of this trend are far-reaching, potentially altering the balance of power in the automotive industry and forcing established Western automakers to reevaluate their strategies. As BYD continues to break through tariff restrictions and showcase China's durable export engine, the challenges for Tesla and other legacy automakers in Europe are mounting, signaling a new era of intense competition in the electric vehicle sector. This shift in European market dynamics underscores the growing challenge BYD poses to established EV leaders like Tesla. This intense competition in Europe is just one facet of the rapidly evolving global EV scene. Next, we'll wrap up today's show with a quick recap of all the major stories and a look at what's coming up next on Electro Drive News. That's all the electrifying news for today. We saw BYD breaking through tariff restrictions by shipping over 900 EVs from Thailand to Europe, showcasing incredible strategic flexibility. We also explored how BYD is a prime example of China's durable export engine, rapidly growing its international sales and challenging global competitors. Plus, we touched on the market sentiment and analyst expectations as BYD's earnings loom, hinting at strong financial performance. Finally, we saw how Tesla's European sales are reportedly plunging amidst BYD's triple threat of competitive offerings. Don't forget to smash that like button, subscribe to Electro Drive News for all your EV updates, ring that notification bell so you never miss a moment, and drop a comment below to let us know your thoughts on these massive shifts in the automotive world. Follow us on all social platforms to stay connected. We'll see you in the next one.